Xpeng stock is the topic of today's presentation, and this company may be pronounced differently for the Chinese, so some would say Xiaopeng or Xpeng, as we say in the West, and some Chinese also refer to the firm as Xpeng. There's probably any number of ways that you can pronounce this, and we'll talk about how the company got its name in a little bit. Now, the stock we're going to talk about today, XPEV stock, is a publicly traded firm. And before we get into that, I wanted to touch on some observations that I've made. So one of my loves in life is to travel, and I've spent a great deal of my life traveling, and I found that all cultures have a few things in common. And the first thing that you'll notice, and it's a really good thing to use, especially in diffusing difficult situations, is humor. It really translates into any language. And sure, people have different senses of humor, but it will always translate with everybody on this planet. Basic humor. Food. Everyone loves eating good food. And women. So this is only particular to men, but if a beautiful woman walks in the room and as soon as she leaves, the men will look around and smile at each other, and everybody knows what that smile means. And it's just it's a phenomenon that you'll see every man in this world do for the most part in every culture. And then, of course, no taxi driver anywhere in the world carries change. You learn that very quickly. Now, when you enter certain cultures, things become dramatically different. And this is more so the case in Asia than anywhere else. And today we're going to talk about the Red Dragon, which China is known as. And it's a very different place to do business. So investing in China is not the same as elsewhere in the world. We've talked about the dangers of Chinese stocks before for foreign investors, in particular VICE structures. I'll put a link to that presentation in the description of this video, but I'm not going to touch on that. We're going to assume that you understand that risk. Doing business in China, you play by a different set of rules. So they have guanxi, which is essentially networking of a different sort. And then there's the CCP, which will determine whether or not you succeed or fail. And without getting political, that's just a government structure that will ultimately decide how things go. And then, of course, the aforementioned VICE structures are all a part of that. Now, if we assume these risks and things like shadow banking and all of Rumsfeld's unknown unknowns that you'll encounter in a culture that's dramatically different from the one you're accustomed to, if we assume all that risk, let's go ahead and proceed. Now, in researching Xpeng, we spent some time in Shanghai visiting with car companies like NIO and observing the market for electric vehicles. And Xpeng wasn't a company that we had come across or researched in our time there. We may have seen several of their vehicles, but the first, any sort of depth that we conducted on this firm, the first look was this press release, which is an unaudited financial result for last quarter. And when I first read this slide, you can see in the upper right-hand corner there some numbers and quarters. I read this from left to right, and I thought to myself, oh, they're doing a pretty good job. Read it the other way. So it actually goes from right to left. That's not a good sign. So their vehicle deliveries are just declining every quarter, and even the most recent quarter, they're just falling off a cliff. In the second bullet point here, you see where it talks about a physical sales network of 425 stores covering 145 cities. You have that many stores and you can't sell vehicles? I mean, these stores cost money. Storefronts are expensive. And they talk about this charging station network with 1,000 stations. Well, operating a charging station network costs a lot of money, and there's always that build it and they will come. Well, they're not coming. That's a problem, right? So when you look at their revenues, you can see those are on the decline as well. A decrease of nearly 46% this quarter compared to the same quarter last year. Gross margin was 1.7% for the first quarter of this year, compared to 12% for the same period of 2022. What that is the price wars they're engaging in, which they can't afford to be engaging in. You can see this negative margin for their vehicles. In other words, they're selling vehicles for less than it costs to make them. So lots to be concerned about here. Now, what management says, this gentleman here, I'm not going to try to say his name, Xiaopeng, probably, he took actions to make changes to our strategy, organizational structure, and senior management team decisively. He's the chairman and CEO. Check out his name, Xpeng. Looks kind of similar to the company's name, doesn't it? That says a lot about, this gentleman is said to be a co-founder. Well, it says a lot about his seniority there and the control that he has. Since the company's named after him, he's not likely to give that up very easily. And the second point here, they have this new vehicle, the G6 will emerge as one of the most popular best-selling models in China's new energy vehicle SUV market segment. Well, we'll see about that. I mean, that's easy to say that you think your vehicle is going to come out ahead, but you're also competing against the likes of NIO and Tesla. So they say here, going forward, our top priority remains to accelerate growth in sales and market share. Certainly hope so. And then they talk about how other new product launches, including this G6, will launch or fuel rapid sales growth. Well, we'd expect that. Certainly, it's about time that the company has a turnaround because everything has been going downhill. We don't invest at this point. We wouldn't consider investing in companies. When we look at a particular theme or a market, we look for leaders, and you can't have declining revenues in a market where everything is growing extremely fast. That's not a good sign. We don't invest in turnaround stories. We're just not interested. And for those that are, we'll continue with the presentation talking about some other bits and bobs, but that would be the end of it for us. So that just wouldn't be something we'd even be interested in at any price. Now, Bloomberg here talks about how Xpeng's plan is to push into self-driving to revive its fortunes. Quite the pivot there. That costs a lot of money, and we'll touch on that in a little bit. And then you can see this piece here from Electric that says, Xpeng triggers price war in Chinese EV market, slashing prices to compete with Tesla. Well, when you don't have Tesla's gross margins, that's not a good idea. And what we'd expect, just from what we've read so far, we'd expect to see a gradual share price decline over time, a valuation that's surprisingly low, lots of volatility, and of course lots of confused bag holders who don't understand that the company is being eaten alive by their competition. Here you can see the declining share price over time and how high that had soared based on all that EV hype that we had warned investors about. They currently have a simple valuation ratio of 3. That's market cap divided by annualized revenues, and that's about half of our catalog average. And when you look at the top EV models sold in China in 2022, you can see the list here at the top, the little mini EV there. Then you have BYD's Song, which is a cheaper SUV. Then you have Tesla's Model Y, you can see there. So nowhere on this list would you see anything from Xpeng. And what's interesting is when you look at the top 20 plug-in vehicles in China for January through November of 2020, Xpeng was there at the bottom, you can see. And then, of course, NIO producing a whole lot more units. We've highlighted them there as well. Now, look at top-selling EVs in China for December of 2022 on the right. You don't see NIO or Xpeng. So that's a problem. Now, this article by the South China Morning Post talks about how Xpeng plans to ramp up in the second quarter. Now that the price war with Tesla and other rivals has dissipated, I doubt that, but certainly a positive spin in this article, and that the company expects deliveries to be between 21,000 and 22,000 units this next quarter. So pay very close attention to that. So they say, well, 2023 is the year we're going to turn everything around. You need to remember that management's job is to rally the troops. Of course, they're going to focus forward and talk about how great things will eventually be once they fix their supply chain problems. Now, we'd be asking a question, is this a demand problem or a supply problem? So these supply chain issues that they talk about, they didn't seem to affect other firms. When you look at electric vehicle deliveries in China, you see Xpeng there right around what NIO's output. But look at BYD at 1.8 million vehicles, Tesla 710,000 vehicles, and you have Xpeng and NIO producing about 120,000 each. Now, the one notable thing here is that Xpeng is selling vehicles into Norway. They've been doing that since 2020 in all of Scandinavia, actually, but certainly doesn't seem to be helping their sales numbers. Well, to help turn the company around, they brought in this executive, Fengying Wang. She spent over 30 years working for Chinese car maker Great Wall Motors, so hopefully she'll be able to help the company resuscitate itself. And right now, perhaps survival is the most important thing to focus on, and you'll hear them express those sentiments. Now, the latest earnings call, they talk about this clear and practical plan to achieve our target of a 25% cost reduction by the end of 2024. They're trying to solve the gross margin problem. That's pretty aggressive. So you say that in the second half of this year and through 2024, you're going to map out a plan, but then that's also going to be executed by the end of 2024. It seems a bit aggressive. They mention here, quite interesting, a monthly delivery target exceeding 20,000 vehicles in the fourth quarter of 2023. That's not quarterly, that's monthly. So we did some back-of-the-napkin math on that. You can see on the right here, they said, we will achieve substantial sales volume growth on a sequential quarterly basis in the third and fourth quarters. Fine. So you're forecasting 21K for next quarter. Let's up that by 50% then for the following quarter, and then 50% again. So you say substantial, let's map those numbers out and call 50% substantial. What you see here is that would equate to roughly 12,000 vehicles being produced a month. If you just split those out, it's nowhere close to 20,000. So the math here just it seems very, very aggressive. The other thing that we noticed in this call, going back to their comment about becoming a leader in autonomy, is that an analyst asked them about driving data, which is very interesting because ARC claims that's the competitive advantage that Tesla enjoys. All their vehicles out there gathering data now for years. And the response by Xpeng was, well, data will really mean more when you have more autonomous driving cars on the road. It's in a much longer future. Downplaying data doesn't seem right. So I think most people would agree that data is what makes an AI algorithm competent, and for them to downplay data simply means they're trying to make excuses for not being able to collect it from lots of deployed vehicles. Now, when we talk about survival, we can look at their current liabilities. This is quite interesting. Current liabilities in accounting are defined as anything that comes due in 12 months or less. They have about $3 billion coming due in 12 months or less, and about $5 billion in cash and cash equivalents on hand. I think they have somewhere around $500 to $700 million in debt, but we didn't look at that. Now, the problem here is that they also have $360 million in loss last quarter. So if you do the math, this firm is burning a ton of money. Cutting back on costs, you can't cut back on your costs and then claim to be a leader in researching autonomous driving. It doesn't seem to add up. You see here, this gentleman who the company appears to be named after, talking to Bloomberg, talks about a positive cash flow in 2024. That's next year. It's hard to see them getting there. Talks about org changes they've made that are geared towards that goal. And then this statement here, in the next 5 years, we may still be a company with only a certain market share in the NEV sector, downplaying their inability to capture market share. They're trying to make that acceptable. And then excuses it by saying, but we hope to hold 20 to 40% market share of cars equipped with full autonomy. Well, you're going to need to spend a lot of money to do that. You're probably going to need some data. So not really buying this pivot into autonomy. Talks about how these long-standing supply chain issues will ease this year, and then implies that all companies that encountered these problems will work better to solve them in the future. Well, it seems like you might be experiencing those problems a little bit more so than others. And then this individual says making profits will be the next step after positive operating cash flow, including from software. And there was other references made about how their autonomous software stack was going to be a competitive advantage and that they might license or sell that. Well, that remains to be seen. They haven't been able to do very good selling cars, so this pivot into autonomy should be viewed with a certain degree of suspicion. And then when you look at articles like this one, so Xpeng abandons LiDAR in their G9 SUV to cut costs when they're selling those vehicles into Scandinavia. Well, that's not, they're kind of stuck here. So either you lean down your functionality and compete with BYD on cost, and Tesla is a different animal, or you go for the premium like NIO's doing and say, listen, this just costs more because it's better. So they seem to be a bit confused. And maybe that new president they brought on board with a lot of experience will be able to sort some of these problems out. But this is a company that's not thriving. They're just surviving, and it's questionable how long they'll be able to do that without raising capital. We invest in leaders in any market or theme, not laggards. Now, this firm lost valuable time and market share spinning wheels. Whatever the problems were, supply chain, whatever they couldn't manage to solve, they lost market share to other firms. And probably the most important thing, you can't engage in a price war when you have negative gross margins. And they're trying to address that with this aggressive, cost-cutting plan. We'll see how that goes. Easier said than done. And we don't really like their language around the self-driving pivot and this idea they're going to capture a significant market share and autonomy in China. This isn't a company we'd ever consider investing in. But if you're interested, we did a 2-part series on NIO. I'm going to put that up. First, please click the Analyze logo here on the right, subscribe to our channel. And then here on the left, I'll put up a video on NIO, and also we'll be doing some more videos on electric vehicle makers in China. So make sure to subscribe. Thanks for your time.